This is Bazaar Morning Call. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Hello, welcome to Bazaar Morning Call. You're watching us live from the CNBC TV18 Motilal Oswal studio. I'm Sonia. Joining me today, Mangalam and Nigel. Guys, markets have been slightly on the fence, right? Because broader markets have been under pressure. But today, global cues are not too bad.
Well, that's right. Global cues not too bad. And we're going to be halfway through the week. So pretty good. Let's see how things pan out then.
Let's see how things pan out. In fact, just before starting, we were talking about how phenomenal the new coastal road in Mumbai has been. One side of that has opened. The market gives me an analogy like that only. Those who are stuck outside the coastal road are perhaps in the mid caps and the small caps. The ones who've taken the coastal road
are cruising through.
Maybe through some of those large caps. The only problem, not many people on the coastal road yet. And that's a good thing, actually.
That's a good thing. But, I want to talk about the coastal road to you later on, maybe after the show.
Yes, most definitely.
But in the meantime, let's tell you what all is happening in the markets. The global cues were strong overnight. No two ways about that. The US markets bounced back. The S&P 500, in fact, closed at a fresh record high. You had the Dow that was up almost 235 points. So at least you have that part of the market which is stable. For our own markets, the broader market pain continues. So if you look at what's happened with the mid and small cap part of the market, there has been a lot of sectoral rotation out of small and mid caps into large caps. So if you just look at the Nifty Mid Cap 100 index, it was down 1.5% yesterday. The Nifty Small Cap index is down 6% in March so far. So that's the kind of pressure that we've already seen. But just to put that into perspective as well, the small cap index was the best performing index last year. So some amount of money is being taken off the table, which is, I think, par for the course. A couple of things to watch out for this morning. ITC will be top of mind after that $2 billion sale by its top shareholder, BAT. That suggests that there is some depth in the market. Of course, Mangalam will talk more about the sale in particular, but a couple of things to watch out for. One is that this is the third MNC this year to pair stake in an Indian arm. And the sheer size of the deal, A, shows you that there is a lot of appetite in the market, and B, that there is a lot of depth in the market. So that is a big positive from the market standpoint. In terms of macro data, you also have the inflation. I haven't mentioned that here because inflation data was very stable, pretty much what we saw last time around, an indication that, the macro environment continues to be quite stable. But Nigel, the worrying part really is what's happening in the broader markets. The sell-off over there, a lot of retail investors reaching out to say, what do I do with my portfolio now that things are a bit under pressure?
Well, that's right. Portfolios haven't been feeling too good. So let's, focus on the three big points that I'm looking at for today's trading session. One is the Nifty Bank. Well, it plays out a weekly expiry in today's session as well. So the Nifty Bank is going to be the one that will be in focus in today's trading session. Let's get that up for you on the screen. The Nifty Bank is going to be playing out weekly expiry. Next up, you have ITC. That's going to be the stock of the day probably, given its weight of close to around 4% approximately. And the other big question is, can the breadth of the market gradually improve from current levels? That's going to be the other big factor. In terms of a hygiene check, well, the FIs, they added close to around 7,500 long positions in yesterday's trading session. That compares with close to around 2,500. So that ratio is close to around 3:1. Currently, they're still net short with close to around 57% of their positions on the short side. ITC, it's going to be the stock of the day. Besides all the fundamentals, the last few days you've seen a surge in the open interest, and that's going to be on the short side. So in the month of January, for that series, the average open interest was close to around 8 crore shares. That's moved to close to around 11 crore shares. And yesterday, there were 35 lakh shares that were added in the F&O market, in the futures market. So those shorts will scramble for cover if in case that deal does take place in the block window. That's going to be an important point to note as well. The Nifty Bank, the important levels come up for you on the screen. That's the broad range you're looking at. And I say that because you have the yesterday's low that came in, closer to this level. And also the 50 DMA is closer to around the 46,600 odd marks. Those are the broad levels you should be looking at on the Nifty Bank. On the Nifty options data, well, put writing continues. 22,000 put, 20,050 put. Both of them did see a fair bit of open interest build up as well, which brings us to the level. Support level, 22,000 mark. That's important. On the upside, 22,550. So we're going to be in this 550 band. In the near term, if you want a reference point, the 20 DMA becomes important, which is closer to around 22,200 odd. Finally, the breadth of the market, you'd like it to improve. And I was looking at the NSE report card. They put this out at the end of the day with regard to advanced decline number of stocks moving either which ways. So you'd like that number of stocks that are advancing to go up to say 700-800 odd you'll be feeling better about the market. So that's one data point that I'll be looking at. The second factor is you have way more stocks that are stuck at lower circuit. On the NSE itself, for yesterday's trading session, there were close to 400 stocks that were stuck at lower circuit, which means there's no exit out there. So that's going to be another important one that I'll be looking at in terms of data point, the number of stocks that are at lower circuit. So let's see how this goes. The breadth of the market could improve. The Nifty continues to remain in an uptrend as long as that 20,000, 22,000 odd mark holds out. And the Nifty bank plays out weekly expiry, which holds the key. But Mangalam, what about the global cues? How are they stacked up?
Well, the global cues are largely positive, and that's a good thing for our markets itself, because that's the one factor that could have played truant had the inflation data come out much higher than what the street was anticipating. So what has happened this morning? Asian stocks have opened higher. There was a strong close on Wall Street. There was some consolidation over the last few trading sessions, but now yesterday the Wall Street indices have bounced back, and they've bounced back from important levels as well. The Nasdaq is now up around 1.5%. The S&P 500 has hit a record high. In the macro end, what could have caused a bit of fear was inflation. Inflation has come in at 0.4% month on month. The street was working with the same number. Year on year, it's 3.2%. Again, the street was working with a number of 3.1%. There has been a slight increase in US yields, but no change in the probability of a rate cut. For June is 70% probability that there could be the first rate cut out there. What will keep US investors happy is the fact that Nvidia has begun its up move once again. The last two trading sessions was down about 7%. Yesterday was up 7%, so has begun to move higher. You did speak about the FIs adding their long positions yesterday, right? From 40%, it's gone up to 43%. Nifty Bank is the one that we'll be watching out for because it's a Wednesday. Nifty Bank weekly options expiry. And for that, it'll be HDFC Bank, which will be extremely crucial to watch. Why is that? Because yesterday the stock did extremely well, and now there is some sort of support expected, largely because of the FTSE inflows, which will come in with effect from March 15th. So that keeps the stock higher. Yesterday it was up around 2.2%. The other heavyweight out there, we've been talking about it ad nauseum, ITC, a bunch of brokerage upgrades coming in too. My sense is that maybe it could be a block window deal today. And Infosys is the third one. IT stocks did well yesterday. Infosys is meeting investors at the Nomura US conference. Any positive commentary coming in from Infosys would keep these three heavyweights intact. And to add to that, we have Reliance, which is doing well as well. So those are four stocks which are keeping the frontline indices okay. The mid caps are a bit of a problem.
Oh, the mid caps are a big problem, actually. Not just mid caps, the small caps, right? So this month, the Nifty is up 1.5%, but the BSE small cap index is down 5.5% this month. So yes, portfolios are getting affected for sure. But let's do one thing. Let's kickstart the show and tell you what's lined up. First up, we have some money market views coming in from Pankaj Chitlangia of First Basis, who says that following higher than expected US Feb inflation figures, the US 2-year yield is seen rising towards 4.6%, while the Indian 2-year yield has recently softened, giving rise to the possibility of a mild uptick in the dollar INR rates. He says chart indicators suggest that the US INR can remain above 82.70 levels and edge higher in a minor correction towards resistant levels of 82.95. He also says a breach of 82.95 levels would challenge holding a bearish dollar INR view.
And on the bonds, we have Neeraj Gambhir of Axis Bank saying that India bond yields fell during the week, tracking the decline in US treasuries. He said the 10-year benchmark bond yield almost touched about 7% post a net downward revision in the last 2 months US non-farm payrolls by about 1.67 lakh. He says US unemployment rate jumped to 3.9%, which is slightly higher than consensus of 3.7%. He adds that Jerome Powell struck a fine balance in his testimony to the Fed as well, reiterating wait-and-watch mode coming in for the inflation trajectory. Expects the 10-year benchmark bond yield to trade in a range between 6.95 to 7.05 this week, basis the crucial data that came in from India and the US CPI data too.
Well, we have a lot of stock-specific action tracked for you. We get to that in just a bit in our special Top 10 segment. For the time being, we run you through the list. We're looking at IDC, Shree Cement, Nidalon, Oro Pharma, Shalby. All of them will be reacting to positive news flow, while we also add to the list Signature Global, Muthoot Capital, Oriental Rail Infra, and Sterling and Wilson. The lone stock that will be reacting to negative news flow is likely to be Vedanta in today's session.